We have 16 billion of cash, not because we want 16 billion of cash or because we expect interest rates to go up or because we expect equities to go down. We have 16 billion of cash because we don't see anything that makes us want to part with that cash where we feel we're getting enough for our money.
When you look at the future, there's also the argument made that this is something that goes with your philosophy today. Get out of cash and get into assets, because we don't know what's going to happen to the dollar.
Well, cash is always a bad investment. When people said cash is king a year ago, that's crazy. Cash wasn't producing anything, and it was sure to go down in value over time. And then you always want to be sure you have enough. It's like oxygen. You want to be sure it's around, but you don't need to have excessive amounts of it around. And cash, we will always have enough cash around. But anytime we have surplus cash around, I'm unhappy. I would much rather have good businesses than cash. And we found a chance in the last year, thereabouts, to deploy. We came in with something over 40 billion in cash, right. And we've got about 20 billion now, and we've had some earnings. So we put a lot of cash to work, and I like that. No, I'd much rather own a good business than have cash.
And it is a hedge against the dollar?
Well, you can say all assets are a hedge against the dollar. All you know is that the dollar is going to be worth less 10, 20, 30 years from now. I say worth less, not worthless.
Right.
You want to watch that. But it will be, and that's true of almost every currency that I can think of. The question is how much it depreciates in value. But cash is not a place to, at that.
Now, why is that? Well, because the dollar is going to be worth less.
Because we'll print more of them in relation to the amount of goods that are moving. If we dropped $1 million of cash into every household in the United States today, everybody feel very good, except the people that invested in things that were denominated in dollars.
Exactly.
Yeah, there will be no tendency toward deflation in this country over time, or in virtually any
tendency toward inflation.
Absolutely.
Okay. So how much cash should an ordinary investor have on a percentage basis, do you think?
It depends on their personal situation. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around that, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent, diversified businesses, you don't really need any cash.
So you can be more cash-free than Berkshire is?
Yeah, I've got responsibility. We've got insurance claims. We could have hurricanes that, would happen. All kinds of things where you might have to pay out billions of dollars. I've got over 1 million people that own shares of the company run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children had grown, the house was paid off and everything. But I wouldn't worry too much about having a lot of cash around.
We do like having a lot of money to be able to operate very fast and very big, and we don't, and maybe we won't. We know we won't get those opportunities frequently. I don't think, certainly, in the next 20 or 30 years, there'll be 2 or 3 times when it'll be raining gold and all you have to do is go outside. But we don't know when they will happen, and we have a lot of money to commit. And I would say that if you told me I had to either carry short-term treasury bills or have index funds and just let that money be invested in American generally, I would take the index funds. On balance, I would rather own an index fund than carry treasury bills. I would say that if we'd instituted that policy in 2007 or 8, we might have been in a different position in terms of our ability to move late in 2008 or 2009. It has
certain execution problems with hundreds of billions of dollars than it does if you were having a similar policy with $1 billion or $2 billion or something of the sort. But it's perfectly rational observation, and certainly looking back on 10 years of a bull market, it really jumps out at you. But I would argue that if you were working smaller numbers, it would make a lot of sense. And if we're working with large numbers, it might well make sense in the future at Berkshire to operate that way. We committed $10 billion a week ago, and there are conditions under which, and they're not remote, they're not likely in any given week or month or year, but there are conditions under which we could spend $100 billion very, very quickly. And if we did, if those conditions existed, it would be the capital very well deployed and much better than in an index fund. And so we're operating on the basis that we will get chances to deploy capital. They will come in clumps in all likelihood, and they will come when other people don't want to allocate capital.
We have $16 billion of cash, not because we want $16 billion of cash or because we expect interest rates to go up or because we expect equities to go down. We have $16 billion of cash because we don't see anything that makes us want to part with that cash where we feel we're getting enough for our money. But we would spend it Monday morning on the right sort of business, or even if we could find equities that we liked, or if we could find, like last year, we found some junk bonds we liked. We're not finding them this year at all because prices have changed dramatically. So we're not really ever positioning ourselves. We're simply trying to do the smartest thing we can every day when we come to the office. And if there's nothing smart to do, cash is the default option. Charlie?
In terms of future opportunities, the issue is it at all likely that there'll be an opportunity like 1973-4 or 1982 even, when equities generally are just mouth-watering? I think there's a very excellent chance that neither Warren or I will live to see either of those occasions again. If so, Berkshire's not going to have a lot of no-brainer opportunities. We're going to have to grind ahead the way we've been doing it recently, which is not all bad.
It's not impossible, though. We'll get some mouth-watering opportunities. I mean, you just don't know in markets. It's unbelievable what markets do over time. We only have about 4 or 5 commercial paper names we accept. We're very picky about where we put the money. All gets invested. We do not have anything sitting around in the safe or any place else. So it's all invested.
Well, cash is always a bad investment. I mean, when people said cash is king a year ago, I mean, that's crazy.
You got a portfolio of decent, diversified businesses. We didn't need anything. And we have a lot of money to commit. And I would say that if you told me I had to either carry short-term treasury bills or have index funds and just let that money be invested in America,
Because we don't see anything that makes us want to part with that cash where we feel we're getting enough for our money. But we would spend it Monday morning on the right sort of business.